Hi traders, my name is Chris from FS Method, Fractal Structure Method. I've been trading and investing more than 15 years. The first 10 years manual trading, and the last 6 years mainly automated trading. And basically the first 5 years of my automated trading, and I used a portfolio of EAs that were not mine, but from other strategies and EA creators. And that worked well, actually. I had good results, and the first 5 years were great. Last 1.5 years, my portfolio of EA is performing not as good as the first 5 years. It's a weaker kind of average performance. So I decided to diversify. And the first thing I did was use all these AI tools. AI tools, of course, everyone's talking about to create my own EAs. And that's something, of course, that a lot of traders are doing now. It's if you look at the videos, it's all about AI and EAs and automated trading, right? But that didn't work for me yet, at least. It's a process that's quite sometimes frustrating, sometimes lengthy. I'm going back and forth. I haven't gotten to a point that I created an EA where I'm happy about yet to trade with my own capital. But I did use AI to the concepts I was teaching 10, 15 years ago when I did webinars with Admiral Markets and XM and Elite Currency. That's work I basically stopped 6 years ago to focus only on trading. But all those concepts I had in mind were, I think, always very valuable and useful. And I did use those concepts for creating a template for my manual trading that really has helped my manual trading a lot. I'll show you how that looks like. There we go. And I won't dive into exactly how all this works yet. I just want to finish the story first. So basically, I started trading manual trading using these new templates for TradingView I created. I think it looks the best on TradingView, but other platforms I'm sure are fine as well. And I really boosted my manual trading with my new template, with my new kind of indicator that I've created for it. And so I went out and said, okay, I'm going to trade manually this system and this indicator. And nowadays, of course, a lot of these funding firms are out there providing capital. So I thought, okay, I'll try that. I mean, that wasn't around, as far as I know, 6 years ago. So I thought, okay, I'll give that a go. So I thought, I'll keep going with the AI tools and automated trading when I can. But in the meantime, let me test and try the manual concepts I've always had in mind and traded 10 years ago. But now, everything codified, everything simplified right there in TradingView. So I have to do much less kind of analysis than I did in the past. So I started a few months ago. In May, everything started to really fall in its place. I was still tweaking my entries, the risk, and stuff like that. But May, I managed to get 2 accounts with Apex funding firm to a live account. And then in the first few weeks of June, I built that buffer that you need. Perhaps you know how it works. You need a buffer before you can withdraw. And in the last 6 months, 6 weeks, so let's say June and July, I made withdrawals and I managed to capitalize on that momentum and make some nice profits, right? So not only did I get the profits, but I also made the withdrawals and the money arrived to my account. So that's great, results. And I want to show you those results actually before I dive into my FS method. There we go. That's me, by the way. As you can see, won FX Street Award 8 years ago. Did a lot of seminars 10 years ago, but I took that break 6 years ago, as I mentioned. And basically, here you have my website, fsmethod.com, and this is how the template looks like. Of course, I mainly trade Nasdaq on the 1 and 5 minute charts. okay? And here you see the results of the live funded payouts, okay? Let me refresh the page. It was a small error. There we go. You see almost 6,500 there. And the performance for May and June. So you can see basically low drawdown, 1% up to 1.7, but yeah, earning 6-7% this month. And as you can see, we continue to look at the live results. You see a profit factor of 3.36. You see the ratio of total profit to total loss. That's that profit factor, of course. Net gain, win rate 55%, average win-loss ratio 2.65, average holding time 7 minutes. Because I'm looking at the 1 and 5 minute charts on the NASDAQ. And I really like the volatility and movement on the NASDAQ. It could be, of course, sometimes a little bit choppy and wild. So we got to be careful as well with the risk management. And of course, keep in mind that trading in general is always high risk. And yeah, before trading real capital, always seek the advice of a financial advisor if that's for you. And be aware that, you know, risk, of course, is always there, you know. And that's one maybe slight advantage of funding firms in the sense that when you pay for a challenge, of course, that's the amount you could lose, but not more. But be aware, of course, that you could lose that amount. Then you see your other accounts. So I basically have 2 accounts, and I put all the data in June and July per account. So there are 4 brackets, but all of them have a win ratio of 50-60%. All of them are about 2 to 2.5 average win-loss ratio. And my average winners are about 8 minutes, average losers about 5 minutes. So I managed to keep the losses small and let the winners run. The T-stat, you know, is about 3.6. So that means that the results are not just random luck. That's what the T-stat says. Okay. Now, of course, I need more data. The more data I get, the better it is, of course. But so far, so good. I'm off to a good start. I'm happy about that. So let me talk more about the FS method here. And you can see that basically when looking at this template, I'm looking for momentum to be aligned. And it's so beautiful. It's like looking at art for me. I feel like an artist because everything is so aligned. And when everything is aligned like that, you get these nice moves, these big moves, impulsive moves. And first of all, I have to say that these green, blue, purple lines indicate the space from the 143 MA and the long-term moving average zone. And as price is able to get, you know, below or above this green level, which I call ET zone 5, then typically there's more space to fall. So look at today, for instance, you see that price in the New York Open makes, or before open, falls from level 5 to 7, retraces, and then falls again from below 5, 6 to 8, almost even reaching level 9 here. And here on the 5 minute chart, you see the break from 5 going all the way down to the 8 level. Okay, pretty precise in this particular case. Now it's not always like that precise, but tends to be. Okay, plus minus. Here you can also see pretty exact hit on the 7 level. Now I use this target levels, these levels, but more importantly as market phase levels. So that's why we have red candles appearing for downside and an orange background indicating there's trend alignment on the higher time frame. So that's what I like about this is you have the space. You know that if it's, I know that if it's below 5, there's a higher chance, high probability the price will make that move down. Not always. But I have some rules that I use to know if it will go or not, or at least increase my chances. Okay, and I'm not always right. I have losses, right? I have 40 to 50% are losses, but point is always to keep my losses small and let my winners run. So I know based on these fractals, which are the purple dots and the gray dots here,
I know based on the ET zones, the background color, the 144 EMA zone versus the 21 EMA zone, and the HMA 120, when I can cut the loss short and when I can hopefully let the runner run. And as you can see, here this orange candle, the red candles and the orange candles are potential entries I use. And look at that sweet move down and boom, here and here and here. Let's take a look at some other examples for the upside. This is this morning. All right, so this is a more advanced trade because the background is not green, as you can see. And here on the 5-minute chart, we're actually retracing back from the 20 EMA to the 144 EMA. So, but still works nicely. As you can see, the green candle right up to move 6 retracement, bounce at the 21 EMA zone. HMA 120 is still bullishly aligned. 144 EMA is well below it, everything aligned, and you get a move up as well. Not all the way to ET7 because there is, too much resistance on a higher time frame here, but a sweet move up. But this is a bit more difficult trade just because not as much is aligned as with the other trades. Okay, so let's take a look here. Let's go back here to the Asian session, okay, and you can see, here we go, ET5 break on the 5-minute chart at 4 a.m. my time, and you can see sweet move down, right down to 7, and then the lower low. And once you get below 7, things can be choppier. So the ideal kind of zone is between 5 and 7 on the second attempt, because the first attempt could go to 5 and 6 or make a retracement first. Between 5 and 7 is ideal, sometimes with an extension to 8. Once you get above or below 8, things can become choppier and the trend could be more rangy and not as smooth. Of course, there are exceptions when price really falls impulsively down to 9, down to 10, ET zone 10, and even beyond. And these zones, when they get that far, are expanding, as you can see, right? So sometimes if the market is very fast, it could go quickly down to 9, even 10, even below that, and still be impulsive. But those are more exceptions. Those are when something big happens in the market and are not usual, right? Usually when price gets to 7, it's ideal between 5 and 7, between 6 and 7, and 8 is pretty good too as an extension. But once it gets beyond 8, things usually get choppier, okay? Maybe we can see an example from today. Right here, still a nice move, but choppier, right? Smoothest, quickest, it was from 5 to 7, and now even to almost 9, to 8 for sure. But then things started to become a little choppier, okay? So here we have that alignment, right? Everything is orange. HMA 120 has a bearish angle. The 21 EMA in price is below the 144 EMA, right? There's everything aligned. And basically we have an orange candle break below the 20 EMA and boom, that fall right there and a continuation, okay? Now I myself this morning actually traded this retracement from the 21 EMA back to the 144 EMA, so that's a more advanced trade because it's counter trend. But to me, at that moment, it made a lot of sense in the sense that there was overextension. There was a lot of space for price to here, for price to go back to this 144 EMA. Higher time frames made sense too. So when price bounced here at 21 EMA and then broke above this fractal, I took one trade at the break of the fractal up to here, and then this break of this fractal I traded up to here. Okay, and that was enough profit for the day for me. Let's take a look at some examples still. So here you see everything aligned. Sometimes it's going to be choppier, right? That's why I take small risk on the setups, because if the setup goes, it goes, and it's going to generate enough points and profit for me. And if it doesn't, I want to keep the risk small, okay? Here you can see, again, yesterday's New York Open, very choppy, but once it falls below level 7, right, it falls nicely down to level 10, or no, 8, 9, excuse me. Okay, but there was certainly the potential for one or two losses, perhaps. But if following my advanced rules, it would be possible to, if one has enough patience and enough nerves to handle these retracements, it could be possible to take some small profits even in these choppy moves. But it depends, of course, it's manual trading, so it depends on the psychology as well, etc. Okay, and that can happen, right? Sometimes it's smooth. Before that was very smooth, right? And that's, I find sometimes that before New York, it can be very smooth. Look at this move from 5 to 7, retracement, and then boom, from 7 to 9. Beautiful fall on that. Let's take a look at the 5-minute chart there as well. Let's see, that was Thursday. There we go. You see on the 5-minute chart, straight from 5 down to 8, and then from 7 down to 9 after retracement and fall. And yeah, these are great moves. And then you see the retracement up again after that, and then a follow through. But alignment, once you have that alignment, it could be really sweet to trade. And this is something I see very often. Not always every setup is going to be as smooth. Definitely not. That's not the impression I want to give at all. Sometimes price only moves from 5 to 6, and that's it. Look, white background. There's no alignment there. Here, it moves from 5 to 7, retraces, then falls for a lower low, but doesn't get to 8. Okay, that can happen. So I just try to grab the profit that I want to grab. You know, for me, if I grab 30, 40, 50 points, it's enough. And price here, just to give an idea, from level 5 to level 7 is falling 90 points, right? From level 6 to level 8, it's 144 points, right? It's more than enough for me to get my daily profit if these moves happen, right? Look at that here again. And some are going to be, some I might manage too tight, some I might manage too loose, but you know, eventually I grab one of these runners when things turn blue or orange. And this is not aligned, but still a good trade. Let's take a look when everything is aligned here once, finally on the blue side. Here we go. Monday, beginning of this week. Let's see. Here we go. Now you can see blue right up, almost up to 8, flag, and the continuation. And it gets choppier, right? It gets choppier above 8. You see? And that's where you want to be careful. That's why when the HMA to 120 is flat or bearishly aligned, I'm not taking this setup. Even though it's a blue candle, it's above 8. HMA is down. You know, it's all about context, right? And those are rules that I have in place to avoid choppy trades like that. But here, yes, right? Here, yes. Even this one, this could be okay. This one not, because HMA is already down. This could be one trade, but I have ways to manage that trade. But that could be loss, of course, it's possible. Depends how I manage that trade. If I use a tight or trail stop loss, usually I probably manage to put the stop loss below this fractal. And then once this goes up a second time, I would use a tighter trail stop loss for a smaller loss, something like that, okay? If I would have traded. This one I didn't trade, but just give an example. Okay, so those are some examples here. Yeah, for me, I love it. You know, I love trading like this. It's like a little bit like art, as I already mentioned. And if you're interested, take a look at FS Method. I'm going to take a break in August. I'm not going to be trading anymore these weeks. We'll be back beginning of September, Monday, 31st of August. I'm going to trade again. So yeah, I'll keep you up to date about my performance. If you're curious about these indicators, it's also available for CTrader, NinjaTrader, MT5, but I'm using it on Nasdaq. The idea could be used for all instruments, in my view, that are trading normally with normal kind of movement, right? But always test it first, of course, right? Always test yourself with practice capital. But I like the Nasdaq 1/5 minute chart. So yeah, I'm using this my FS method, fractal structure method, with ET zones, fractal, moving averages, candles, and time patterns on TradingView, Nasdaq 1/5 minute chart using funding firm capital. That's my setup. In the meantime, I'll continue with using AI to make it EAs, and I'm going to try in my vacation to all the concepts I have with this template, with this indicator, with this system, to try to codify it in an EA as well. So wish me luck. I've tried different individual systems. As I said, I didn't get there quite yet. Maybe I'm making it too simple. I'm going to try to codify this complex kind of thought into EA. So wish me luck on that. But I keep trading manually because it takes me, one setup, a few setups. Typically, after 1 to 3, 4 setups, either I win on the first setup and I hit my daily target. If I lose, I might need a second, a third, a fourth setup. But usually I'm ready within an hour or 2, max 3. Of course, sometimes market can be choppy, so then I might need to trade longer, but usually that takes me about that time. And I don't like to trade. I mean, it depends, right? Sometimes I like to trade a bit longer, but more than 4 hours, you kind of lose focus. You kind of lose that feeling for risk. And I like to keep things a little bit shorter and disciplined and just reach my daily target and move on. But that's just maybe my style that works. So yeah, if you want to try it out for with these indicator and system, I need to add more members videos. But yeah, if you want to try it out, take a look at FS method and let me know what you think about it. Okay, try always with practice, right? With demo first. Try to get a feel for it. And you're going to run into struggles, right? This is a manual trading system. This is not something you're going to learn overnight. I'll be honest with you, it is going to take some learning curve there. But once you get there, I think it's for some of you, it could be valuable. I think that a lot of traders are probably looking for something like signals and very simple stuff. Now, this is something that the template is simple in certain ways, but it's going to take learning curve how to manage the trades and stuff like that, right? So if you're interested in taking that effort to learn that trading itself with this template, I'll be happy. I'll be great to have you on, as a FSM member, and I'll try to help where I can, as much as I can, and I think it could be interesting. All right, so we got a special price available to the end of the month, or for the first trade to the end of August, or the first 20 traders. So yeah, I'm happy to be on a holiday starting Monday, or starting now. It's been an interesting experience, and I'll keep you up to date in September about how my manual trading is going. And let me know if anyone is trading manually anyhow in the comments, because that's a big question, isn't it? All right. See you, and wish you good holidays as well. Cheers. Bye-bye.